Good morning and welcome back to another pipeline trading video. Today I'm just going to give you a quick synopsis on what's going on in the overall market because yesterday got bought up pretty bad after that big sell-off, which was expected because people are optimistic in the market. Whatever Trump told people, that had a big effect that, the market's going to keep going higher. And typically at the end of an 18-year cycle, we're going to see things acting more irrational than usual. That's typically what happens at the end of a cycle. So first things first, I'm going to go over the markets: oil, gold, Bitcoin, ETH, BMNR. I'll explain what I'm doing there. My Intel trade that I covered yesterday, which I'm going to be looking to resize in. And check out my video from yesterday because when I closed that out on Intel, I explained why I was taking the loss to reposition myself. And I'll go into that as we break that down. First things first, I don't know if anybody's been paying attention this morning, but wholesale inflation jumped 6% in April, which is the biggest increase, they're saying, since 2022. So what's interesting about this is they, I guess, adjusted it for 1.4 month for the month, much higher than the 0.5 that the Dow Jones census forecasted. And what also I found very interesting is this excludes food and energy. So core PPI accelerated 1% compared to 0.4. So that's double. And if you go to the other figure, it's tripled. And that's not good. So there's a lot of fudge going on in the markets. And you could see if we go to the semiconductor ETF, this thing's the volume's still pretty decent. I would have liked to see I'm on the weekly. I'll go to the daily. So we got our first red candle that got bought up pretty big. But what's interesting is, I'm going to go back here. So the first red candle, that sell-off, if you look at the volume, it accelerated. So be very careful at these levels because it could look like it's going to go back up. If we don't make a new high, it's going to start coming back down. And you want to see it. It should touch. It hasn't touched yet the 10-day moving average, which is 540. And then eventually we should go to the 508, maybe a little higher, fill this gap over here at 522. Keep an eye out for that. But like I said, things are really, really overheated in this. So I do expect when it does, stop, I guess you could say. You don't want to short the highs. You want to wait for it to give you the signals. What does that look like? Well, the volume's going to pick up on the selling. When the market does go back up, you're going to see that the volume isn't high. So that's something to keep your eyes peeled for because that just means that there's a little distribution. There's no big high volume going up and they're distributing their shares. If we go to oil continues to go up. This one, again, it's still 50-50 in my eyes because if we get one piece of good news, to me, we're still in the head and shoulder pattern. So where I would say this is done is if we go like this. I'm going to draw this in. See, here's what's interesting about this, because if you were to go and do this, so you could see how we have two different signals, because typically what would happen here, and this is where, again, you're in the middle. You don't want to make a decision based off of anything yet. If this breaks out of the wedge, and I mean holds above it, holds this line as support that I drew in, and we start building support at about 106, you could get a spike in oil that goes to 150, depending upon where it breaks out of this wedge. Like what I mean by that is if I move let's say it chops here, breaks out over here, then obviously the price will be 140s. But this is where you have to be very careful, because any bets that you're placing in here as the investment for your thesis is really, really high risk. You could see that we haven't had any major spikes yet. We are holding above the 10s, above the 20, prices above the 50, and we could go and make our next leg up. This can be, like I said, A, B, and then C. We have one more move up, or it could be an impulse. This could be an impulse wave, and this could be 1, 2, make your wave 3, come back down to here, 111 for wave 4. I'll draw this in actually so you can see it. This is what I love about just knowing Elliott Wave. It just gives you a bird's eye on where things can play out before potentially going, right? Like we could see something like that. And typically, just so you understand this real quick, why I'm looking at this is if I were to draw my fib to look at this as wave 1, right? You could see that we held the 0.618, so 91.40 as support twice, right? And typically on a wave 2, you have the one big wave up, right? An impulse wave. And then what you're going to see is a retracement of about 60% or more. It can't retrace more than this area right here. It can't go below 80 or 79.41. And then it could go to make its next leg for 3. Wave 3 is the longest wave. Wave 4 cannot go below the territory of wave 1, or else it's invalid. And then typically what you would see, and this is where it gets people if you don't understand this, wave 4 and wave 2 are different. If wave 2 is sharp, wave 4 typically is going to be chopping sideways and get people by surprise. And if you see it going down diagonally to the downside, a lot of people sometimes mistaken that as a trend reversal, and it's not. Because when they chop downward, they typically go to the upside, unless the entire trend is different. So that's what I would be keeping my eye for, peeled on right now. And wave 5 can go to the top of wave 3 or a bit higher, but at this measured move, this is a scary part, guys. If this war continues to pick up and things do not get resolved, which it doesn't look like Iran has any, they don't care. Plain and simple. I think they've been prepared for this war for 20 years. People that are, chanting death to America, death to Jews. Those are pretty heinous. It's crazy. It's crazy to think that in 2026 we still live in a world with all this stuff. But that's the reality of it. This is something that has been going on for a very long time. And not to go into politics, because I don't like politics, it's part of it, right? This has been going on for thousands of years. So if anybody's thinking that we can't get a spike into the 140s or make a new high, or maybe we don't, maybe we just go back up here and fall apart. Again, nobody knows. It's in uncharted territory right now. Sorry, I take that back. Not uncharted territory. You're in a sideways chop. So anything that you were playing here, if you wanted to play this line to short it with a tight stop, you could. And then you can make a play to go to the long side over here. But for me, this isn't something that I would be looking at doing. There's too much uncertainty. If I go to gold, gold looks like it's selling off a bit, but we're going to see, because what's interesting is it got rejected by the 50, and we got to see if this makes a lower low, which it still can, right? This could be an A, B, and then C. That's still valid, right? And we're in this wedge. If we're holding this fair value gap right here, and we're holding this shallow retracement. Could we even retrace down here and then make its next leg up? Absolutely. But if this happens and gold were to spike like that, um, that means that something's about to break in the market because it's a flight to safety. So keep an eye out for this. That's why this is important to watch. If I go to the 10-year, I've been saying this now for weeks, and a lot of people think rates are going to go down. I don't see how they can do that unless something catastrophic happens. If there's a black swan event, if things escalate to the point, because the issue that America has right now, yeah, their GDP is increasing, and there's a lot of things that they're saying with AI and the benefits of it and what it's going to do across the board, which I don't really disagree with. The problem with that is you're seeing companies now laying off people uh, at record numbers, even though unemployment's still low. There's a lot of hidden things because of the numbers. This is where this is in uncharted territory. The numbers for the GDP may be increasing and looking great, but beneath all that, people could be hurting because there will be jobs that are lost due to this. Companies are going to have to get more efficient and they're going to make some big investments. It's twofold because then at the same time, if people are willing to reinvent themselves and learn new things, then they're going to have a job in the marketplace because with all this tech is going to require upkeep. But companies are going to be getting more efficient in cutting the fat, I guess you can say, especially with rates going higher. They're going to have to, and they're going to have to deal with the debt that they have in order to fix whatever's going on their balance sheet. And we'll go to Bitcoin next. So Bitcoin looks like it's going to come down to 79 next. And I thought maybe, okay, this candle yesterday, it looked like it wanted to hold the 10-day, but then we're selling off. And a lot of it has to do with these numbers that came out with wholesale inflation. So if inflation goes up and continues to hold, they're not going to be able to lower rates. The market priced in that there's going to be a few rate cuts this year, and that's where the market might reevaluate what it did, and then you might see a pretty healthy pullback. And with earnings, the earnings are great, but again, go back to what I said earlier. Look at Intel; their earnings are better; they are improving. However, if you look at the valuation of the company, and you were to compare it to what they were valued at when their earnings and revenue were greater, it was almost, I think, at $70. We hit 130. So they got a double on their valuation with 3 times less in revenue. So again, those are things to pay attention to. And right now, again, this is at a make or break level, because if we were to push up and get up here, hold this level as support, then the whole argument of the 4-year cycle being dead could be true, right? If we were to make another run up here. But this level is crucial. We need to break above this. If we don't, I see a lot of liquidity. And for me, based off of this and what I'm seeing and how the volume looked, this whole move went up. Look at what volume did. Nothing. This move went up, volume increases. So you could see buyers. This right here, you're seeing the RSI, you're seeing the momentum shift. You saw that there was extreme fear. So you knew that there was going to be a really good liftoff here, right? Now, what we're seeing is this could just be distribution. And then one thing happens, just one event, something big. And we get another massive 1-day sell off and we break down and take out this liquidity. The chances of it going down are a lot higher at that point. If we get a big sell off here and we break the 50, so if we break 76,479, this thing's coming down. And you could say, okay, maybe it goes down to the channel over here, call it 72. But from what I'm seeing on the heat map on the liquidation, just to give you this, if I were to go to the yearly, because I'm just looking at the 1 year, I don't really like to do the 24 hours because I know a lot of people aren't really trading that. We've made lower lows and we've made lower highs in price action, and we're in a bear flag. Okay. There is a boatload of short liquidation at 100, I think 6.6 billion. Okay. But if you were to go down and look, there's over $6 billion to the short side, $6.8 billion from February. So you have to ask yourself, are we in a market that, as people are becoming more optimistic, this entire stock market made a new high? Bitcoin has not made a new high. It hasn't broken those key levels. Is Bitcoin more likely to go to 100K? Or is it more likely to go back down and retest to 60? So for me, that we're in a downtrend, we're in a bear flag, I would say the probability of it going lower is greater than it spiking up to over 100. Unless something happened. I don't even know what could happen, because even if the Clarity Act comes out and all that stuff, the market could be pricing this in. There is accumulation, there is more things that are happening, but we're not seeing the volume pick up to go to the upside. If I go to ETH is about to break the 50-day, which is what I've been saying, and look at the liquidation down here. So I think ETH is going to go and retest eventually the 2000 area. If we break the 2000 mark, just to give you an idea of where the measured move can go, if I were to draw a line here, ETH can go down to 1462. And what's interesting is we may not go that low, but we could actually, because I connected the bottoms. So maybe we go back over here, we go to 17. Like, this could be a secondary test. If anybody knows Wyckoff, we came up, we came down, right? We had the selling climax, then we had a secondary test, and then we had our move up. Doesn't mean that we can't have another secondary test and go and test to see if the 1747 holds up. Which, if we spike down to the downside and we take out this liquidity down here at 1900, we very well could see a lot of fear kick in and the selling pressure pick up to push us down to this level. And if you remember what I was saying, this fib level, the 0.786, is huge. So that is a good area where you could have been accumulating some shares down here, and then maybe keep afloat because we have a fair value gap down here, which is interesting because look where the fair value gap lines up with the diagonal one. So you're at 1689. So I would be a buyer there, and I would be a buyer down here, because remember, I put this in. This is something I use myself, the 0.88. Not a lot of people use it that I've seen. But it's always good to use because there's a lot of times where we've had really, really high selling, and the 0.88 holds up really well. So I like that one. If I go to BMNR, I'm looking to cover my covered calls, and it looks like we should get another leg down to maybe 20 and change, right? If I go to the options chain, I don't think it's going to close below 20 this week. We have 10,514 open open puts on the $20 strike, where we have 5,000 open interest on the 20 calls. Now, what's interesting is we actually had a lot more put activity. We had another 10,434 puts on the 21 strike open interest. So what this is showing me is at 22 strike, we have 15,525 calls. I would say that we have a really, really high probability of this closing between 21 and 22 a share for BMNR this week. That's what I'm anticipating. And the moment we get enough of a spike down, I'm hoping, because I'm on the 2 times leverage, I'm on BMNU. Right now, I'm really in the money. So I sold the calls at $2. They pay me 55-cent premium. As you can see, these things are almost worthless. I think the lowest the calls are to buy are 5 cents. So I'm basically waiting till closer to Friday, because I'm not going to pay the 5 or 8 cents, because there's a bit of still a time premium going on there, but I'm getting close to get this out. And then if I go to Intel, yesterday what I was saying is playing out exactly how I thought it would. I said over here at about 16, right here, 1650, I covered my short. We did get another leg down, but I was just starting to see with the volume, it wasn't really picking up on the sell side. So I covered over here. And then we started to gain some traction. I said that if we broke above the 20, there's a very good chance we're going to go back up here, maybe fill this gap or go into this fair value gap. And I'm looking, actually, no, I'm wrong. I said 124 because of this area. So right now, if we get another test up here and the volume starts to die off, I'm going to be looking to re-enter my short somewhere up here and just monitor it on the 1-minute chart and then keep an eye on the 5. Tesla hit our target and then sold off with the measured move. So if Tesla holds above this line and continues to, I mean, we could get a test back here at 409. If it holds 409, I might take a stab at it to maybe go and hit and break above here. But there's a lot. This is a very, very bearish order block up here. So keep an eye on that. Meta still looks like it wants to go to the downside, but again, watch these gaps and watch these Fibonacci levels, because this is something where, again, you had a nice ABC fair, what's this called? Sorry. You had the move up, which is impulsive. This could be wave 1, wave 2, wave 3. Now we're in wave 4, so we might get a retest of 672 area. Sorry, is that 672? No. We should get a test of 681. And then we'll see. If it breaks out of this, it can go much higher, and this could be, all of this could be a wave 3, or this is going to be a wave 4 to a wave 5, which will either be at this level or a bit higher. But still, we don't know yet, so keep an eye on this. Watch it closely, because this is showing that it looks like it wants to go a little bit lower. Google. I mean, Google, I think, is going to go up a bit, fade out, and then make its next leg down. Google, I would expect to hit this diagonal line at about, call it 630, what is that, 365 area. And that's pretty much it, guys. So if you found today's video helpful, me running through things like this and explaining what I'm looking at, why I'm more of a swing trade bias on where the stocks look like they're going to go, and then however you want to position it with your strategy, that's up to you. If you found this helpful, please support the channel, subscribe, hit the bell notifications, leave a comment below. Someone left a comment on another stock that actually is like Intel, which I'm going to be keeping an eye on and potentially making a video if I put that trade on. But as always, stay disciplined, trade with intention. God bless you all. Make it a great day.